All right, chapter 4, process costing. So the last 2 weeks we've done job costing. So we looked at, we are producing products that probably are not the same. There's something unique about these different jobs, right? So we can have changes. And then while we're doing basically the same thing with process costing, over there with a job, we're taking all of the costs and we're associating a job number and we're tracking that way. Process costing, we're doing the same thing. We have raw material, we're pulling out of raw materials, we're going to work in process. We'll have multiple departments in the process, and then we go to finished goods. So it's basically the same process going through, and you're going to see some of the same accounts. However, this is producing products that are not different, they're the same. So we have multiple quantities of the same exact product. So think about something that's produced in mass production that's the same. Could be paint, could be a chemical, could be, you know, a line of shoes, they're all the same. So the plant production is going to be the same across the board. So there's going to be a little bit of a difference in how we calculate the cost and what's in work in process. So basically we're doing the same things, but the only difference is now we have this product that's the same. So we're not costing out how much of work in process for this job went over. So we're going to have to figure out, okay, something called equivalent units. Have to figure out a way to know, okay, we have all of these products that are being produced, they're work in process, what percentage of completion are we? We're going to make an estimate based on that. So basically that's what this slide says. So we're still using our direct materials, direct labor, manufacturing overhead. We're still doing the raw materials, work in process, finished goods. We're going to add in multiple departments. This is basically what I just said too. Okay, so process costing is used for products that are A, different and produced continuously, B, similar and produced continuously. I have to do this so you can't see the next slide. You probably already saw the answer. It's not hard, you should know it anyway. C, individual units produced to customer specifications, and D, purchased from vendors. So what do you think the answer is? Process costing is used for products that are? Yes, B, similar and produced continuously. So this is our answer here. Okay, any unit in the organization where materials, labor, and overhead are added to the product is what we're looking at. The activities performed in the processing department are performed uniformly. So we're not going to have any variations. We're producing just, you know, the same product in a batch. All right, so here's our three that we've been talking about, since the beginning when we started the chapters: direct material, direct labor, and manufacturing overhead. So those are the three that are flowing into work in process. And then we have our finished goods. So for the jobs, which we just talked about, jobs will have a job number. Those will go to their job costing sheet. And so you're looking at, okay, how much was produced in this one particular job? It's unique from this job. Okay, this time we're looking at the processing department. So inside of that processing department, we'll have multiple departments. So what that means is, so maybe there's a product line that comes out of raw materials and goes into department A, and they have to do their part and complete the work in order to send it over to the next department. So they do the first phase, and then the next department will do the next phase. So that's why we have different departments. So throughout the example, they're going to use department A and department B. We're going to look at the T accounts just like we did on the other chapters, and we're going to look at the journal entries. Journal entries are going to be very similar to what we did before, where we're pulling out of work in process, raw materials, and putting into work in process, and we'll be following those along. So don't forget about what type of accounts you're looking at, so you know how you're moving and how you're going to be doing your journal entry. So remember, raw materials is an asset, work in process is an asset, and finished goods are also an asset. So we're tracking all of that. We also have, like, there may be times when you're looking to see, well, how much inventory is left in my my raw materials? How much inventory is left in finished goods? What am I left with in work in process? How much cost is that going to be in work in process that I have to move out of the raw materials and direct labor? So we'll look at that. So here's the flow. So we have our direct materials. They're going to come out of that department. So there's a credit, right? So remember, the right side is a credit. And then it's going into the work and process department. So we're pulling raw material out and we're bringing them into these different departments. We are going to debit the work in process because, again, that's an asset. So that's the phase that we're in. So it's going to be on our balance sheet. So we're going to have a debit to the work in process and a credit to the raw materials when we pull out. So this is all the same stuff, nothing new. Same thing we've been talking about for the last 2 weeks. So here's our journal entry. When we pull out of raw materials, we're crediting, debiting Department A, Department B. So the only difference is instead of having one work in process, you have A and B. All right, this is direct labor, same thing. We're going to set up that payable. Remember, we're not paying them right now. A lot of times it's on a 2-week. So you have a little bit of a delay, a timing issue when they're working on products. They are not getting paid that day. So we're going to set the liability up as they're working on those jobs. So we're going to credit the payable because it's a liability. We're going to be paying that in the future. And that moves into work in process. Same thing. Instead of just work in process, we have work in process Department A and Department B, but it's the same thing we've been doing the last 2 weeks. Here's the journal entry. Debit, work in process, credit, payables. Manufacturing overhead, we're doing the same thing. We're going to calculate some predetermined overhead rates, and we're going to use that to apply to the jobs during the period that we're in production. Our journal entry is to credit the manufacturing overhead and then debit the work in process, Department A and Department B. The actual overhead, when we're doing the overhead during that period, the actual cost is going to go in as a debit. And remember last week we talked about the over and under applied, and we had to look at that. So that's why there's 2 things in there. Here's a journal entry, same thing. Debit work in process, Department A and B, credit manufacturing overhead. Okay, so when we're in Department A, we're in production, we have to maybe get it to a certain point. And then once that's completed, we're going to move it over into the next department, and they're going to do their part in order to finalize the product into the finished goods status, and then we'll move it into the finished goods. So we have to calculate out how much is coming out of Department A. So it all goes in, manufacturing overhead, direct labor and direct material. And then as that completes, and we'll be looking at this when we start doing the calculations, we're going to take a portion of that and transfer it out. That was completed in Department A, that's going to B, and we're going to transfer that cost out. So we credit. It goes into Department B. So now all of those costs that were there now flow into B. B also potentially is pulling material, direct labor. They have their manufacturing overhead that's been assigned for that Department B. And then you'll also have your transfer costs coming in. Here's the journal entry. So just pulling it out of one department, putting it into a new department. So the credit is when you pull it out, the debit's when it's going in, because it's an asset account, normal debit balance. Hi. And so if you keep that in your mind, you'll know how these journal entries are flowing. All right, so in Department B, now we've finalized some of these products. We're going to take them out. So everything that went into A has been transferred out into B. We've added some things in B, and now they're completed. So that's my total manufacturing cost. That when it's complete, it's going to come out of that final department and it's going to move into finished goods. So we're crediting Department B, work in process, and we're moving into finished goods. That's our final resting place until we sell it. Okay, that's our asset of finished goods that's what we're going to be selling. And here's the T account. We see the credit over here going into debit when we sell the product. So remember, it's cost of goods manufactured. That's all of the cost that's been used in production for the products. And then when you sell it, now it becomes a cost of goods sold. So cost of goods sold is because it was sold, right? Easy way to remember it. All right. When we do the journal entry, when we sell products, remember we looked at one of these, I don't remember if it was last week. I think the example was last week. When we sell a product, we have to not only account for the revenue that's coming in, and if they're giving us cash or we're setting it up to an accounts receivable account where they're going to be paying us in the future, we also have to take care of the costs and remove the inventory. So this entry is only showing the part where we're removing the cost from the finished goods. So we're crediting finished goods because we need to take that out of our inventory. We're selling it. We're moving it into cost of goods sold, and that's because we've sold the product. And normally you would see this with that other journal entry, which is for revenue. So there would be accounts receivable debit or cash, and then you would credit the sales. And that should be for more than what the cost is. All right. Some of these slides are kind of wordy. So we want to look at each department. We're calculating two numbers for financial reporting. We're looking at the cost of its ending work in process. So remember I told you we're going to have to figure out how we're going to have a number that's associated with work in process. So the products aren't completed in full. There's a percentage that they're completed. So we need to figure that out. Whatever the percentage complete is, that's what we're going to use. And then we have the cost of the completed units. So we're pulling units out, going into either the next department or going into the finished goods, and we have to calculate that as well. All right, two methods, weighted average and FIFO. I don't think I go over FIFO. I think we're using weighted average. On the homeworks, I think I only pulled weighted average. So the weighted average, this method makes no distinction between the work done in the prior and current periods. It blends them together. Okay, so we're not looking at prior costs and then the current period. We're just blending it together and averaging. And then we have the equivalent units of production for the department. They're the number of units that are transferred to the next department. So that's called equivalent units. And the equivalent units in the department ending work in process. So we have the ending work in process where there's equivalent units coming out going into the finished goods. All right, conversion costs. So we have direct labor. They're often small in comparison to the other product costs that are in the process system. So this is a little diagram that shows you that some of that labor is going into the conversion costs. And then we have our direct materials here. So our conversion costs, which is that direct labor and manufacturing overhead. All right, definition of the equivalent units. It's defined as the product of the number of partially completed units and the percentage completion of those units. Okay, so we're looking at how much of it's been completed. It needs to be calculated because the department usually has some partially completed units in the beginning and ending inventories, and we'll look at an example of that. The partially completed units, they're complicated in determination of a department's output for a given period and the unit cost that should be assigned with that output. All right, so here's the little formula, equivalent units. So we're going to use number of partially completed units. So they'll tell us how many have been partially completed and what is the percentage. So we're going to multiply that together to get the answer. So assume department A has 500 units in its ending work in process inventory that are 60% complete with respect to processing in the department. Okay, so we have 500 units, but they're not completed in full. So that's why we didn't pull them out. They're still sitting in work in process and they're only about 60% complete. So we'll take the 500 units, multiply it by the 60%. to come up with 300. So Department A's ending work in process inventory would contain 300 equivalent units for the period. Does that make sense? What equivalent unit is? So they're not complete, so we can't count all 500. So it's just an estimate. We'll say, okay, we're 50, 60% complete. So instead of calculating on the whole 500, we're just gonna come up with a percentage, multiply it by the quantity, and that gives us our number. That's the number we're gonna use to times by the cost to come up with what the total cost is of work in process. Any questions so far? For the current period, Jones started 15,000 units and completed 10,000 units, leaving 5,000 units in process 30% complete. How many equivalent units of production did Jones have for the period? So how many did we have completed? We had 10,000 completed. So those came out. And then it says we're leaving 5,000 units in process that are 30% complete. So we're gonna have to take the 5,000 times the 30%, which is 1,500. So it says, how many equivalent units of production did Jones have for the period? So that wants to know how many were completed. So we've completed 10,000. So we have to include that. And then we have to calculate out the equivalent units that are in work in process. And we're going to say the 30%, which is the 1,500, we're going to add that to the 10,000. So we're saying 1,500 units. It's like having 1,500 units complete by looking at the 5,000 times 30%. So we're saying we completed 10,000 plus the 1,500. So it's 11,500. It's B. Okay, so here's a table. Smith Company reported the following activity in the assembly department for the month of June. So we're only looking at one department. We're looking at assembly department. So they're telling us that we started with 300 units and then we pulled in production 6,000 units. And then it says units completed and transferred out was 5,400 units. The ending work in process is 900. Okay, at the end, it tells us for the material, we're 60% complete. For the conversion cost, we're about 30% complete. So the 900 that's left in work in process, we're going to use those percentages times the 900 to calculate our cost for that work in process. Okay. I say we begin to calculating the equivalent units and transferred out of the assembly department in June. So we had 5,400 units. That was the information they gave us. So we have units completed and transferred out was 5,400. So 5,400 for materials, 5,400 for conversion. Next, we're going to identify those equivalent units, okay, with the ending work in process. And then we're going to multiply what it was in the percentage for the materials and then what it was for the, the percentage for the conversion. So first we have 900 units left in work in process. We multiply it by that ending completion, which was 60%. So we have 540 in the materials. And then we had a different percentage for the conversion, which was 30%. So we do the 900 times the 30%. Our conversion is 270 units. So equivalent units of production in the department for June was 5,940 and 5,670. So if we're looking at equivalent units, this is the number, okay? That's how we get it. We take what was transferred out, we calculate the work in process times those percentages given it to us at the end of the period, and that gives us our total equivalent units. All right, so it says equivalent units of production always equals the units completed and transferred, whoops, and the, oh, it won't let me write. And, okay, so units completed, and then we add the equivalent units, which was the work in process. We're good on that so far, right? Okay. All right, so here's our materials. we started with 6,000, 6,000 units were started. So remember, they told us we had, let me go back. We had units started in production in June, 6,000. So that's where that number is coming from. They told us that information. Okay, and then we have 5,400. So we're gonna do our units complete was 5,400. So we had our beginning work in process. If you go back to the table, I don't know if I want to go back to it, but it had the 300 times the 40%. And then we had the 51 units that we started and completed. So 5,400 comes out, and then we calculate it based on that ending number, not the beginning, the ending, to calculate the equivalent units. So we add those, so it's 5,940. So this is basically what we just looked at on that other table. It's just breaking it out a little different to help you understand where the numbers are coming from. All right, so let's look at conversion. So remember, we had 300 units on the table times 20%. Then we had the 51 units started and completed. So that gave us a total of 5,400 that were completed. And then the ending work in process was at 900 times the 30%. We got 5,670. So if they ask you to calculate equivalent units, you should have all that information to be able to do that. Okay, now they're adding in costs. So we're looking at what costs are associated with these units of production. So for the beginning work in process, we had 300 units. Material was 40% complete and the conversion was 20%, and they give us the cost associated with that. Then we started production on 600 units, we complete 5,400 units. So the cost added to the production in June. So when we had that ending work in process, when we calculated those percentages times the number of units that were left in there, that gave us our equivalent units, we would calculate out, if we knew per unit what the cost was, to come up with these total costs that were already in the production process coming into the new period. Now we're adding costs. So now we're still in that department. In order to finalize these, we have to pull more material, get more labor, some more manufacturing overhead. They're giving us the cost. We don't have to calculate it in this example. So we have material cost that was added of 118,621. Conversion cost, 81,130. We have our ending work in process inventory, which was 900 units. And then they told us 60% complete and 30% complete for conversion. All right, so we're going to look at the weighted average. So we're doing the cost in the beginning of the work in process. We're going to add the cost that was added during the period. So we have that top number plus what was added to come up with our total. And then we're going to divide it by the equivalent units in production. All right, so it's telling us our total cost. So we had, let's look at material. I'm looking right here at this one. So we're going to look at the materials department. So we have, materials in this department. So we have work in process on June 1 was 6119. We added in 118,000 to come up with a total cost of 124,740. So all we're doing is adding those together. Then we know the equivalent units, because remember we calculated this out based on the units that they gave us. So we came up with the equivalent units. Same thing for conversion. We looked at the cost that was given to us for conversion. What did we have that was in work in process coming into the period? What did we add to it to get the total cost of 85,000? And then we already calculated out the equivalent units. So it's 5,670. Now, how do you think you figure out per unit? We take the total cost and do what? Divide by the units, and it'll give us our per unit. So here we go. So if you have a question that's looking for something and you maybe are trying to get to something that isn't given to you, you may have to calculate out how much is it per unit to use that in order to calculate to get to the answer. So we had 124,740 in the materials department divided by the 5,940. So it gives us $21. And then we had $15 for the conversion. So when you add them together, you get a total equivalent unit cost of $36. All right, so here's our calculations. We had 540 equivalent units and 270 in the work in process department. We're not looking at in total, we're just looking at the work in process department. What's left in there was 900 units. Okay, so we have our cost per unit that we just calculated. Now we know the ending work in process inventory. So we have 11,340 and we have 4,050. So remember on the example when it said beginning work in process and those numbers that came in based on what was happening from the previous period. Now at the end of this, let's say it's months, at the end of this month, this would be what we're carrying forward in the work in process, a total of 15,390. So that's our materials and our conversion costs. All right, our units transferred out was 5,400. Now we already calculated the cost, so we're using that same cost to know how much is coming out of work in process and moving forward to finished goods. I finished 5,400, I'm gonna use the same calculation, which is $21 for materials and $15 for conversion. So I'll just multiply that. So my cost that was transferred out to finished goods is gonna be 113,004 for materials and then 81,000 for conversion for a total cost of 194,400. So when we look at our journal entry, we're gonna have to take out from this department, we're gonna credit the 194 and we're gonna move it to, let's say it's finished goods that moved out or to another department, it would be the 194,400. That's the number we'll use. All right, so we're looking at our assembly department. So we had cost in the beginning. That was the material plus the conversion costs. So we had a total of 10,000 in the beginning inventory. We've added from production 199,000. So now we know the total cost that needs to be accounted for. So the way that we just broke this out from the equivalent units and the cost that moves out of the department, we should come up with that. We should be able to reconcile back to it. So we have the cost ending in the work in process is 15,390, which we had from that calculation that we did. And the cost that was transferred out is the 194,400, which was those 5,400 units that were completed. So the total is 209,790 and they reconcile. So we have everything in check. All the costs are accounted for. Okay, any questions? That is literally the end of the chapter. I told you it was not very long at all. It was pretty quick. So, all right, do y'all understand what's happening with the equivalent units? Because sometimes people get confused. They don't really understand what an equivalent unit is. Did I explain it where you understand what an equivalent unit is, or do you have questions? So if you have, the beginning inventory and we're adding to it, you have all of these products that you're producing, these total units. Not when they come out and they're finished, we can determine what's 100% complete and pull out. But you're left with work in process, and because there's just a bunch in the batch, you have to figure out how much is it that's complete. Because we want to make sure we calculate all the costs. We don't want to pull, we have all this 200,000 costs that went in, we're just going to pull that out for the period. We don't want to do that because it doesn't match what's happening with the units. You want to make sure you're matching what's happening with the units. So the way to do that is what they call equivalent units. The equivalent units piece just means, okay, I have 500 units left in there. What's the percentage that's complete? Does that make sense? All right, so I want to look at just a couple more examples because that was just one that we went through. And so I'm going to pull up the homework. Maybe it won't let me out because I'm in. Okay, why is it not letting me out? It's like I'm locked up. Maybe I have something open somewhere. Get rid of that. It's locked up. Maybe it's this one. Now, how do I get to that? It's got a note. I didn't even see this. That's not on my screen. That's why I'm having a problem. Hmm. Any ideas? It's PowerPoint, and right now I don't see this on my screen. This is what I see. And I can't. And now I can't get a menu up. Let me see, maybe if I do. There we go. Technical difficulties. I like to think that, oh, now I lost all my, I had the website open. I had Moodle open, Connect was all open, and now it's gone. I don't know what I did. I like to think that I'm a little bit technical savvy, but sometimes, I guess maybe it's a blonde moment. It happens.
I think this is a second screen rather than it mirroring your device.
You think that's what happened? Like it was extending it?
Because I saw this say too, so I think that it was like a separate screen.
Okay, maybe so. So I would have had to have done it on that screen. I was trying to use the arrows, thinking maybe it would just kind of arrow and kind of like tab over, but it's okay. Figured out how to get out of there. Aren't y'all excited? Because now we get to look at some of the homeworks and do more. So you never know where you're going to end up in business. So maybe you'll be calculating equivalent units at an oil company. You never know. If you get a business degree, you can end up anywhere. But like I said, I mean, I have people that I work with that have finance. So you never know. Can be in the accounting department. We have fun in the accounting department too. My boss came in, I just want to tell you the story real quick. My boss came in and he was like, oh, I finally got the journal entry to work. We switched payroll companies and he's been setting everything up in Access and trying to get things to match and being able to just print something out so he can say, here, do the journal entry to one of the guys we have in the accounting department. And he was like all excited. I'm like, man, we are nerds. Like something's wrong. Like this is what gets us excited, being able to say, oh, my journal entry is going to work perfect. Yes, and he came back and he's like, I found an error. This is what happened. I had to fix it. Yeah, it does. Okay. All right, so we have Clonex Labs uses the weighted average method in its process costing. Can't see. You're right, it is extended. How do I?
You might be able to drag it over.
There it is. I don't know what I did. Okay. Well, that's not good. I don't want that. Okay, hang on. I got to fix it because that's not what I want. I'm not going to be able to show you the example turned around backwards like that. So I have to go into my settings and I think display. I must have hit something when I was in PowerPoint that made it change. Display is in here. Okay, so I want to Where's the screen? Here we go. Show only one. All right, so now are you seeing? No. Anything yet? Duplicate. There we go. That's what I wanted. Okay. Clonix Labs use the weighted average method in the process costing system. Oops, sorry. I was trying to push this over. The following data are available for one department for October. So we had work in process for October in the beginning was 52,000. Here is our percentages. And then at the end, we had 34,000 with our percentages. So it's saying the department started 393,000 units in production for the month, and they transferred out 411,000. That was what was completed and went to the next department. So it says compute the equivalent units of production for October. So we need to complete just the equivalent units portion. So we have to know how many total came out. What is the total cost going to be? So we have 411,000 that we know are completed in full. And then we have 34,000 left. So we have to figure out how much of that is an equivalent unit. 34,000 times 73%. When we do 34,000 times it's right here. 34,000 times 73%, we get 24,820. So because we're saying that portion's complete, we're going to include that in the units coming out. So we have total equivalent units of production of 435,820. Then for the conversion, it tells us we had 411 coming out plus this 34,000 times the 52% complete, which is 17,680. So we add those together. So we're good on calculating equivalent units, right? So this was just a one-step question. So at the end, you'll have multiple steps, but I wanted to show just these examples one more time on how to get it so that you're good when you do your multi-steps. Okay, so we have the units that came out, and then we just take in that ending balance and multiply it by the percentage and add it to. Superior Micro Products uses the weighted average for process costing. Data for the assembly department for May appear below. So here's all of our information. Compute the cost per equivalent unit of material, labor, overhead in total. All right, so in the beginning, we had materials had a work in process cost of 21,1. So we're adding it down here, okay? 21,1. What did we add to the production? We added 128,030 in material. So we're going to add those together to come up with total materials. Then we do the same thing for labor, same thing for overhead. We're just going to take them and take the beginning, what was added, and add them together. It tells us our equivalent units, so we don't have to calculate out the equivalent units. They're already given it to us. They're telling us what those units are up here in the table, and that's a number that we're going to use. So we have equivalent units of production, which is 1,800, 1,700, and 1,600. Okay, so how do we figure out per unit? We take the total cost divided by the units. So we're taking the 149,130 divided by the 1,800. That gives us our 8285 for materials. And then we do the same thing for labor, overhead. Add all three together, and that gives you your total. So I don't know if the homework's going to make you put the total, and maybe it'll sum it up right there. I'm not sure. Okay, so now that's walking through the cost. So number 9. So we have prep department, first processing department in a company that uses process costing appear below. We have our equivalent units and ending work in process inventory. So we have materials and conversion. The cost per unit, so it gives us our cost per unit. A total of 22,000 units was completed and transferred to the next processing department during the period. So it's saying compute the cost of ending work in process inventories for material conversion ends in total. All right, so the first one says, what is the cost of the ending work in process? So we have materials, units, 20,000, 2010. And it was 1416 per unit. So we just have to multiply to get the total costs in work in process. We multiply to get the conversion costs, and then we add those together. So that's the first line. Cost of units transferred out. It tells us that we had 22,000 units. So we're going to take that 22,000 units and we're going to take the cost per equivalent unit, which is the $14.06. So we're using the same numbers and we're just multiplying. So we had 22,000 times 1416 and we get our cost for materials. Do the same thing for conversion and then add them together. So cost of units transferred out, those are your costs. And let's look at number 10. So Maria AM Corporation uses the weighted average method in its process costing system. Baking department is one of the processing departments in its strudel manufacturing facility. In June, in the baking department, the cost of the beginning work in process inventory was $4,800. We have cost at the ending work in process inventory was $1,150. The cost added during production is $25,600. So prepare a cost reconciliation. So this was like that slide that we looked at just to make sure that we had everything accounted for. So we have the cost at the beginning work in process, which is given to us right here, $4,800. And then we have the cost that was added, $25,600. So the total production cost is $30,400. We're just adding those two together. And then we want to look at the ending work in process. So it tells us the ending work in process is $1,150. And then the cost of units completed and transferred out. So in order to calculate the $2,950, we got to add the $4,800 plus the $25,600, which is the cost that was added to get the $1,150. Then we take $4,800 plus the $25,600 minus the $1,150, because remember, we're pulling out what we know is left in the work in process. I'm going to pull that ending balance out. And so the difference is the $29,250. Does that make sense? So when we add them together, we have to just back out the ending to get what's moved out. And they do match. So it's just like the example we did on the slide. So do y'all have any questions? And there's some other questions in the beginning that are a little bit easier, and then there's some behind this that's going to do multiple steps, maybe a little bit harder. But I don't feel like it's that complicated. But if you get stuck, just email me. If you email me an example or what the problem is, that's fine. Just send me a text and let me know you emailed me. So I haven't been getting a whole lot of emails, and I think that's because this one, this class, I feel is a little bit better, like a little bit easier to understand than that first accounting class.